Welcome to the webinar, The Next Era of Industrials Innovation. My name is Kristen Marshall, Associate Research Director here at Lux, and I will be moderating today's session. Presenting today is my colleague Yuansheng Yu, Senior Director here at Lux. Throughout the webinar, you can type any questions you have in the questions box on your screen. Time permitting, we will answer all the questions that we can. If your question does not get answered, please do not hesitate to reach out to us at questions@luxresearchinc.com, and we will respond. Also, if at any point you experience any technical difficulties, such as a frozen screen, simply refresh your browser and check your internet connection is strong. Now, let's jump into today's presentation. Take it away.
Thank you, Kristen, for the kind introduction, and welcome everyone. Again, thank you all for joining us today as we take a look at the state of innovation in the industrial sector. Not just the big picture, but direct insights from innovation leaders from the world's largest industrial companies, ranging from conglomerates to industrial machinery and equipment manufacturers to engineering and construction firms. So despite ongoing macroeconomic and geopolitical headwinds, the industrial sector has fared relatively well during these turbulent times. The sector has benefited from very clear investment themes, healthy financials, and a strong backlog of projects and orders. But of course, those macroeconomic uncertainties continue to loom, primarily impacting the timing of how the industry proceeds across several areas of innovation, rather than the direction in which it will go. However, that last factor is a major one, with many economists speculating on the possibility of an economic bubble or even global recession. But none of this is new. The industrial sector was in a very similar situation about a quarter century ago, reaping the benefits of globalization and the commodity boom in the early 2000s. Industrial players checked the same boxes: clear investment themes, healthy financials, strong product and project pipelines. But of course, following the boom came the global financial crisis, which sharply reversed commodity and industrial demand that all companies benefited from. However, it was the companies that capitalized on that upcycle by accelerating innovation efforts, such as building stronger capabilities, introducing new products and solutions, and expanding into new markets, that were best positioned during the recovery. As you see in the headlines here, both Siemens and ABB innovated aggressively during this upcycle into future areas of growth, such as electrification, automation, and it offered these companies optionality during this recovery. Then at the bottom of the screen there, you see that the classic Harvard Business Review case study on Honeywell and its strategic moves during the financial crisis. Of course, much of it was centered around cost management and divestments, but not to be overlooked was Honeywell's decision to really aggressively accelerate R&D spending and innovation activities during the upcycle, which also played just as important role during its recovery following the crisis. Now, we're not saying a recession is coming, but now is the time that savvy companies really leverage innovations and technologies to bolster its portfolio, and we're already seeing that happening. Eaton acquired Boyle Thermal just last month, merging a power management business with liquid cooling systems, creating what is ultimately an end-to-end data center infrastructure portfolio that really elevates Eaton's position in the data infrastructure market. CRH, alternatively, is building out its low-carbon cement portfolio by acquiring Eco-Material Technologies to provide logistics and waste management services for its fly ash feedstock needs. Completely different industries, but the same mentality of advancing innovation efforts during the upcycle. And these examples are at the core of how the industrial sector, time and time again, has shown that innovation is the catalyst that turns this momentum into transformation. Rather than defensive posturing or simply resting on the spoils of today, companies that parlay the positives of today are the ones that reap the benefits of tomorrow, whether or not the tomorrow ahead is good or bad. So in today's webinar, we'll cover 3 items. First, how have innovation priorities shifted in the last 12 months, of course, because of the macroeconomic conditions. As you may recall, Lux introduced a new set of innovation priorities for its industrials research and advisory service a year ago, and today we'll see how focus has changed. Second, many of the technologies are reaching technical maturity, but still lack commercial traction. So how does Lux assess these technologies holistically, and what key questions are innovation leaders looking to answer beyond the technology itself? And lastly, what methodologies and approaches do innovation leaders in the industrial sector need to adapt so that they can drive successful innovation now and going forward? So real quick recap, last year, Lux unveiled its Lux priorities for industrial innovation leaders. It was a pivotal moment for us at Lux to reimagine the offering and actually pinpoint the high impact innovation and R&D priorities for the specific sub-industries within the industrial sector. And looking back, one of the most important elements of our client priorities was taking an outside-in customer-centric approach to make sure we are grounded in comprehensive data, real industry shifts, and aligned to the actual strategic needs of today's industrials innovation leaders. So first, the data. We had the same 74 of the world's largest industrial companies as last year. We analyzed their new annual reports. We combined that with nearly 6,000 questions and over 1,800 innovation initiatives shared with Lux over the past 2 months. And just like last time, this is the insight you don't get from the headlines, right? This is what innovation leaders and teams are actually doing and prioritizing behind the scenes. Second, we applied advanced NLP to uncover recurring themes, patterns, and areas of focus, specifically in the context of technology, innovation, and R&D, giving us that deep data-driven understanding. And while comparing the results to 2024, we engaged nearly 40 innovation leaders to validate, interpret, and even stress test these themes and technologies uncovered. And using this combined approach, we confirmed the continued relevance of the 5 client priorities and a further refined set of technologies informing the next era of industrials innovation. So if we looked at 2024, it was clearly the year of decarbonization. The percentage you see is the number of companies that had innovation-driven initiatives in each of these Lux client priorities. Yet in 2025, it would be an overstatement to say that there was a major overhaul in any way around innovation strategies. The industrial sector really avoided any knee-jerk reactions to the macroeconomic uncertainties. Rather, we see companies refining their innovation strategies while also building on previous efforts. But most notably, you do see a large increase in next-generation materials and manufacturing, which we'll dive into in much more detail along with the other 4 priorities that we have. But before we do that, I want to see some notable trends across sub-industry as well as region. As you may recall, Lux focuses on industrial conglomerates, industrial machinery and equipment manufacturers, and engineering and construction firms. And this year's analysis reveals how sub-industries are refining its innovation strategy. For one, decarbonizing operations and enabling the energy transition remains the top 2 priorities for engineering and construction companies, continuing to account for most of the innovation-focused initiatives, even as both saw the largest drop from the previous year across the 5 priorities. Industrial conglomerates, on the other hand, retooling for new market opportunities emerges as the top priority, which is a unique contrast to, say, machinery and equipment manufacturers, which is actually swap focused with next-generation materials manufacturing, reflecting a shift towards enhancing product performance through advanced technologies rather than leveraging existing technologies to find new opportunities. And the focus we saw a universal increase across all 3 sub-industries was next-generation materials and manufacturing, and it was the only priority to do so. Regionally, we see some interesting consistencies, but also divergences in strategic innovation priorities. And these differences matter, especially as companies like yourself are looking to turn momentum into transformation, look to carve out positions in each of these respective markets. So one thing was, despite sort of an overall decrease in decarbonizing operations as a whole across the whole sector, as well as many of the major setbacks and delays that filled the headlines due to regulatory and market uncertainty, companies across all regions remained quite steadfast on innovation initiatives within this domain. Again, solidifying the benefits of how clear the direction of the investment theme has played favorably in the sector. Resource security and circularity increased across all regions, most notably in the Americas, of course, driven by intensifying supply chain vulnerabilities and, of course, growing concerns over access to critical minerals. We expect this to rise even more during 2026 and look forward to actually updating this in 12 months from now and seeing how much larger this has grown as critical mineral security concerns grow further. But lastly, One of the most prominent divergences that we saw was in next generation materials manufacturing, with APAC companies seeing the highest increase, EMEA companies kind of staying relatively flat. However, in contrast, we saw a sharp drop for companies in Americas. And during our interviews, we were kind of getting the inference that this had a lot to do with cutting back on, say, cutting edge R&D, instead focusing more on near-term focus and incremental gains when it comes to R&D. And we think this played a really major role in this nuanced difference between the regions. Using that same set of data, we of course conducted a bottom-up analysis. And in that analysis, we found 72 technologies of strategic interest across the sector. Here on this slide, you only see the top 15 technologies overall, and the darker box shows the focus of that technology within the sub-industry. Now, there's a great deal of diversity in the types of technologies, which is really reflective of the very broad role industrial players play across numerous sectors, but a few trends still emerge. One is that energy technologies, ones enabling the energy transition, hold prominent positions and at the same time reflect a very diverse set of technologies and necessary competencies. On one hand, you have large infrastructure-based technologies like low-carbon ammonia, hydrogen storage and transport, while others are on equipment specialization, such as low-carbon combustion. And innovation initiatives are not always outwardly facing either, looking to leverage industrial robotics, maybe even humanoid robotics, to streamline and automate in-house operations, or also tapping into advanced sensors to enhance capabilities and functionalities of both in-house equipment and products and solutions offered to the market. But what stands out most is the rising wave of material science, or next generation materials. Novel and advanced materials are claiming an increasing share of the top technologies, and as such, Lux has actually identified and will expand its coverage to include things like 2D materials, photonic materials, porous framework materials, novel electronic materials, and structural performance materials. 3 of these 5 which are in the top 15, as companies continue to look to integrate these materials to redefine exactly what is possible in terms of performance and functionality in their offerings. This is a really interesting paradigm because you're looking at what we would typically label an expansive innovation to apply it to an operational innovation as well, which we'll talk about a little bit later at the end of this presentation. But while technology remains core, we know that innovation success requires more than just technology. Over the past 12 months, this latter question, what else is needed for an innovation to be successful, has become increasingly prevalent in Lux's conversation with its clients. The reason behind this is because technology alone ignores the complexity of an organization's ecosystem, and we break those down into 5 factors. You have product. The innovation must be a well-defined offering with clear use cases and customers in mind. Technology readiness. It's what most of the focus is on when we look at innovation. But then you have market organization, which is a supporting ecosystem that must exist, including supply chains, logistics, as well as regulations and infrastructure. Then market readiness. There must be an actual eager adopter and buyer of this technology. Even any technically sound innovations won't move without demand. And lastly, production. The right suppliers, engineers, manufacturing facilities must be available and aligned to scale. But it's not only the maturation of each of these 5 factors, but also the convergence of them at once that will drive success, especially in a first-of-a-kind investment, many of which in the case are the technologies that I showed previously. And the success of that first-of-a-kind investment is key, as any future investments and truly scale of the innovation into the mainstream will depend heavily on it. So in the following section, we're going to dive into each of these client priorities. We'll outline why it's critical, how should the industry act on them, and we'll also take a look at some innovation in action, highlighting innovation progress. More importantly, though, and something different we did this year is we'll pull from the 6,500 innovation questions that I mentioned earlier and actually distill down the questions that innovation leaders across the industry are looking to answer, not just in general, but across each of these 5 factors of innovation, to really highlight not only the technologies are fundamental to each priority, but how innovation teams are tackling and approaching them as well. So first up, decarbonizing operations. Without saying, decarbonizing hard-to-abate industrial operations is a structural challenge. Economic realities are also forcing companies to really balance their net zero ambitions with feasibility. And while regular clarity sorts itself out, near-term efficiency gains and retrofit solutions are going to be key in creating some of that momentum in decarbonizing your operations, especially with pilots serving as initial testing grounds for more transformational technologies. And while we showed the quote from the CRH CEO about their acquisition of eco-material technologies at the start, this is certainly a key innovation in action worth spotlighting. This is a strategic move by CRH to secure its feedstock supply so it's able to stand up its low carbon cement business, which it has identified as being one to drive future growth. And while there are technology readiness questions to be answered when it comes to decarbonizing operations, as we've noted, several technologies are still in the early stages of development and pilot. One of the key factors that determine the pace of innovation in decarbonization will be market organization, one where the policy frameworks, value chain, and infrastructure developments and the technologies converge to form an economically feasible ecosystem. For example, such as low carbon steel, which we saw increased technology interest a few years ago, but both policy and infrastructure developments have yet to match. As for resource security and circularity, industrial companies deal with physical materials, right? And the security of those materials is no longer just a procurement concern or problem for these companies anymore. It's potentially a threatening and defining constraint on growth. Innovations in circularity, alternative sourcing, and resource efficiency offers a few paths forward. So moving early can help with reducing exposure, diversify inputs, and even embed circular models where appropriate, of course, to withstand what could potentially be the next volatile shock as countries continue to use critical minerals and resources as geopolitical negotiation tools. And this opportunity in critical minerals is becoming more and more tangible and certainly real. Even enough where companies traditionally not involved in the space, such as oil and gas industry, are making acquisitions such as Chevron, ExxonMobil, and Equinor directly into the lithium value chain. And this is really opening doors for industrial players as well to kind of carve out their niche role. And given the downstream use of critical minerals, quality remains a concern. That's where the product is able to meet the needs of refiners and manufacturers incorporated into their technologies. But equally important is the signal around production. Where are you actually seeing major direct lithium extraction project announcements being announced so you can have an actual indicator of progress? With these projects, leveraging more novel approaches such as membranes and electrolysis, what type of unconventional brines are they actually tapping into? These are all signals that are important to see the progression of this technology. And then third, you have next generation materials and manufacturing. Again, the one innovation strategic priority that increased across all sub-industries. And this really hinges on the fact that competitive advantage is shifting from just incremental product improvements to sort of speed and effectiveness of the innovation itself. Right? Next generation materials and manufacturing process are becoming sort of essential platforms to meet rising demands in functionality, performance, stability, durability, etc. And the widening gap between tech-enabled R&D organizations and slower incumbents, it's actually ultimately going to reshape market dynamics, right? Those high-impact platform materials are likely to define the next wave of differentiation when cost is no longer the only indicator. And another example shown earlier was Eaton's acquisition of Boyd Thermal for its liquid cooling solutions. You could also even say this is innovation in action for uncovering new market opportunities for Eaton, but we have another example later. So this strategic play to vertically integrate a data center liquid cooling solution both takes into a new market opportunity while also incorporating a new material technology into Eaton's portfolio. But when it comes to next generation materials, technology readiness will certainly always be the first factor to look at. Many of these future platform or next generation materials, such as 2D materials and photonic materials, are inherently futuristic to a certain degree. But the story of innovation always remains true that technical breakthroughs do not always equate to commercial disruption. See, that's why market readiness is a key question that emerges, such as what market segments are actually demonstrating demand for novel thermal management materials. Data centers, as is shown, is easily one of them. We also see the same pool from EV batteries and consumer electronics as well, where the technical capabilities of next generation materials are meeting a need the market is ready for today. And of course, we have enabling the energy transition. the global energy transition continues and will continue. Its trajectory is hitting some bumps, obviously, some anticipated, some not as much. But the industrial sector remains critical enablers to support these low carbon systems while also benefiting from not being directly energy players themselves. Success will depend less on chasing scale, but identifying the solutions that can survive regulatory uncertainty and even lack of subsidies. Timing investments carefully and supporting these resilient energy transition pathways will emerge as an indispensable pillar of any industrial sector player's business portfolio. And while I've shown innovations in action so far, I think it's also important to show innovation in action. Notably, the US DOE's cancellation of over nearly $8 billion in funding that was once positioned as a landmark funding effort to support development of hydrogen hubs and DAC. The setback is one of many that drew headlines in 2025, and it's really shows that while the convergence of the 5 factors is important for all innovations, the ones that require system level changes like energy transition, it's even more critical. In the example we showed just exactly how market organization falling through has led to measured delays, cancellations, and setback. However, there are also signals that not all is lost when you look at production in the enabling the energy transition, because right now we're looking at if there's real world demonstration of industrial complexes integrating low carbon hydrogen. And the fact is there is, right? Air Liquide made a FID just earlier this year on installing a 200 megawatt electrolyzer at the Port of Rotterdam, which really shows the dynamic and evolving state of innovation when you look beyond the technology. And the last and final priority, retooling for new market opportunities. I think it's safe to say that industrial companies themselves rarely set the end market demand, but they are deeply shaped by it. Some focus on being reactionary, while others seek out new opportunities that can leverage their long-standing product portfolios. Growth going forward, though, will really favor those that opt for the latter, especially those that anticipate how emerging technologies reshape their customers' needs. Strategic partnerships, which we've shown already, partnerships and even collaborations with startups can really help provide visibility into the new potential opportunities that are on the horizon. And Aquatech did just that with its acquisition of Koch's lithium pro sorption technology, IP. The deal also included Koch's existing licenses, including major US projects, and Aquatech is leveraging its expertise in water treatment as well as its existing activities in supplying systems to other lithium recovery players by now becoming a vertically integrated provider themselves by retooling some of its offerings and acquiring some to take play into this new market opportunity. Now, new market opportunities will always be the most broad innovation priority for the industrial sector. On one hand, it can leverage existing technologies as is, such as an advanced membrane, to understand the market readiness of a new segment that are looking for better solutions. Or it can be about finding its position in market organization to accelerate the value chain of emerging markets, such as low carbon ammonia. So we've spent some time here. We've gone through the core of the industrial sector's innovation priorities, how they've been refined, and the holistic view of some of the most relevant technologies to drive innovation success. Now it's time to act. Innovation is going to be the catalyst that turns the momentum of today into the transformation of tomorrow, really doubling down on the wins for a bigger payout. So first is forecasting, or even foresighting the potential risks that may not be visible today is critical for building your innovation strategy. One area of importance, if the presentation today didn't already emphasize enough, is that critical minerals and raw materials are growing in terms of strategic importance. The Lux Raw Materials Criticality Framework takes a quantitative look at the true risks in supply, such as supply chain conservation, unstable governments, as well as the criticality. Will we actually run out of this material into consideration so that an assessment can be done to determine the potential impacts to the sector's products, service, and business operations? And this will help target the right innovation strategies to take on a future-proof, sort of resilient position in any future scenario. Now, earlier, aside from the key questions to answer, what other purpose does the 5 factors of innovation success serve? They're actually the weak signals you should be listening for. So the weak signals methodology follows 3 steps. Imagine, where you envision a possible future, listen, identify early signals that this vision is materializing, and amplify, explore the full consequences if the signal becomes mainstream. So systematically listening for weak signals across product, technology readiness, market organization, market readiness, and production. These are the early, often overlooked events that foreshadow those larger changes. And it really helps you better position your innovation strategy, as well as sort of navigating the uncertainties that currently we faced. But lastly is sort of discovering and dabbling. So the industrial sector can't really discover as much, right? Discovering new scientific breakthroughs or tinkering and testing. But what it can do, though, is that it can really focus on the dabbling. So I'll talk a little bit about that in a little bit, but what the Lux Tech signal actually provides is an integrated signal of science, investment, and commercialization, right? So it makes it uniquely suitable for tracking these really early scientific efforts and the moment when they get picked up by some investors or inventors. And as I mentioned, while the discovery phase is likely too long-term for the industrial sector, it's still important to monitor breakthroughs that you hear so that you can determine if it's a potential breakthrough for you or not. But dabbling is actually going to be the key. You really can't expect others to predict the impact of a scientific breakthrough for you. Some are predictable, but others emerge only in the dabbling phase. So use this chance to take some of those breakthroughs and test with your products and solutions and to see if you can pick yourself a winner. Now, to wrap up, just a few key takeaway messages from the insights we've gathered from our analysis of the data, the interviews that we conducted on the next era of industrials innovation. One is the only certain future at this moment is that there are numerous uncertain futures, plural. It's important to make assumptions using the weak signals methodology. Of course, you can focus your innovation efforts on those future scenarios that your organization deems most likely. But at the same time, the weak signal methodology will also allow you to remain agile enough when another future emerges. 2, technology is just one piece of the puzzle. There are numerous case studies, again, of technologically transformative breakthroughs that led to minimal or zero commercial disruption. So keep monitoring the 5 factors of innovation success to determine if a tipping point has been reached that will increase or decrease the technology's probability for success. And third and last, in a period where near-term focus seems to be the number one priority and incremental innovation is sort of the war cry of R&D teams, now is really not the time to lose sight of technology advancements, though. Notably, the industrial sector is uniquely positioned where even what we would call typically expansive innovation efforts, right, where you're looking at really cutting-edge breakthrough future materials, they actually have potential near-term benefits, right, by finding those technologies that can translate into your existing products and solutions. And that translation really is something only you know best. So keep that innovation funnel filled and ensure that you're constantly scanning the horizon and testing these new ideas on a regular basis. And with that, we thank you all for joining today's webinar. We hope it shed some insights into the thinking of innovation leaders across the world's largest industrial companies, hopefully confirmed some of your strategies, but also inspired a few new ideas as well. Thank you again, and we'll take a few questions from the audience.
Great. So we will now be taking questions from the audience. So please type your questions into the questions box on the screen. If we do not get to your questions during the webinar, someone from Lux will be in touch. Okay. So the first question is, how have tariffs impacted the industrial sector this year?
I thought 6 months have passed and we'd still talking about it. But of course, naturally, as the industrial sector relies heavily on raw materials and supplies, tariffs definitely had a major impact on sort of the progress of a lot of these innovations and technologies. Now, obviously, it was more of a shock to the system as kind of everyone starts to recalibrate what this new environment means. But it also shed a light on just how vulnerable many of their supply chains are. I think we'll see more plays to potentially find alternative sources or even alternative materials to be used. But those are probably going to be more mid to long term bets, and kind of navigating tariffs will remain sort of a financial kind of gymnastics exercise for the time being.
Okay. And this question is kind of almost like a follow-up, but would you say that this next era of industrials innovation is defined more by market dynamics and constraints or by new technologies?
I'll hedge here and say it's inevitably both. It's the market constraints that are going to sort of catalyze a look into these new emerging technologies. But there are so many different lenses, as I mentioned earlier, that the industrial sector can view innovation, right? There's the perspective from the company itself and its products, its solutions, and sort of what it's manufacturing. There's certainly going to be continued efforts in innovation to enhance and further improve and kind of create the next generation version of those. I think that's going to be driven by technology. As for sort of the other lens where industrial sector players are mostly kind of being enablers or suppliers, sort of they're the pick and shovel providers in a gold rush. I think that's really going to be driven largely by just market constraints. And as mentioned earlier, the investment themes are clear. It's really not about direction. It's just about timing now.
And this next question is on a topic that we actually get asked about a lot, but what industries are under threat from critical mineral supply challenges?
Oh, wow. Well, if you read the usual headlines from the usual newspapers, you would think every single industry is under threat. But that was one of the drivers that led to us actually building the criticality framework, because we actually wanted to see, is this true? And in some cases, there definitely are serious material constraints. A big one would be something like EV batteries, where cobalt, copper, and graphite are seriously under threat from supply risk as well as shortages in terms of meeting future demand. But then on the flip side, for some technologies like data centers, where you always think about how much critical minerals, I think there's 35 different critical minerals that go into a data center stack. And, it's been pushed as one of the areas that we need to have more supply chain security around. But when we did an analysis on that, we realized that this is percentage points, like single digit percentage points, or even, less than 1% of global supply. And the risk is really not going to be there. So I think it really is going to depend industry to industry. And these are two that I think shows the wide ends of the spectrum of how critical minerals are, despite the headlines.
Yeah, great. And, check out that research if you haven't already. Really good framework. Okay, time for one last question. How does deglobalization impact the industrial sector?
Oh, that feels like a loaded question, because I feel like if I answer that, I acknowledge that deglobalization will occur. Actually, I'm glad that question was asked then in the chat, because we actually conducted a innovation survey not more than a few months ago, asking innovation leaders across the globe throughout our client base several different questions about tariffs, uncertainty, AI, and sort of geopolitical tensions. And one of the questions was about sort of the new world order in terms of globalization versus deglobalization. And I think I'd have to agree with many of our clients that we work with that answer that globalization will resume and there will be continued cooperation, and we won't really break into these we might break into some fragmented regionalization, but I highly doubt we would ever end up breaking into kind of isolationism at the end of the day. So with that said, I think it's some impact. I think there are going to be very regional specific technologies and innovations that gain more favor than other areas. But I think the solution providers that offer them will come from globally.
Okay, great. All right. Well, thank you so much again, Yuan Cheng. That concludes our webinar for today. The slide presentation and recording will be sent to all attendees via email. After leaving the webinar, you will be prompted to complete a survey on the presentation. We would very much appreciate any feedback that you have. That will just help inform and improve future webinars. And also take a moment and check out our upcoming webinars. Thanks so much for joining and have a great day.